budgeting, credit scores, and I'm sure any other questions you might have about financial literacy. So we do have a special guest today. His name is Landon McCormick, and he's the
it's technically market president.
Okay, market president with Maverick Bank. So he's here today. So if you can go ahead and just give him your undivided attention. So
thank you. Appreciate it. Thanks for having me. So I know, we're talking about banking, budgeting, and credit history, which is the last three topics, or one of the last three topics before your spring break. So I know spring break's right there. So y'all bear with me, and we'll learn a little bit together today. So my name is Landon McCormick. I went to South Plains College, and then I went to Texas Tech University and got a degree in business. So before we start, I want to just take a brief second, just tell me your name, your major, and what you want to do when you graduate. So we can just start right here and go around.
My name is Kaylin, and my major is in early education.
Okay, perfect.
my major is engineering.
Okay, wow, engineering. Okay.
Major.
Okay. Dawson, I remember you from church. I've seen you at church. Okay. Good. Okay.
My name is my major is computer science.
Okay, perfect. Okay, nice. Hey, I am not artistic. I'm just going to tell you that right now at all. So, we have a pretty good variety here. So, bank accounts. We'll start with banking. So, who in here has at least one bank account? Okay, so that's not a surprising statistic. According to the FDIC, in 2023, 96% of the population in the U.S. has a bank account. So that's pretty standard. So I'm not surprised by all your hands going up. So what is needed to open a bank account? If you opened a bank account, you may have done it with your parents. It may have been a little bit before you did it. So any ideas of kind of the basic things? There's 4 basic things that we would need to get a bank account open. Any guesses?
ID.
That's the first one. You got the first one on the list. So driver's license. Any other guesses?
Social security number.
You're 2 for 2. Yes, and I'll say on that, you don't always have to provide your card. A lot of times you can just offer your number and they'd run it through the system. And then your phone number, so preferably your cell phone number. And Dawson, you're on a roll. So what's
Email.
Yeah, we need a resume, Dawson. That's good. So email address. I will caution you because I made this mistake. Try not to use your college email when you sign up for a bank account or any other things, because that email will go away at some point. And if you're like me, I forgot that, and it can cause some problems down the road. So money makes the world go round. You may have heard that. So we go to school. We're all going to school to get a job, and then we get a job to make money. And our money supports us in our lifestyle. And the reality of it is our money can control us, or we can control our money. So I'm going to kind of talk through a few things to kind of help with that. So that kind of completes the banking section, which is probably our easiest section so far. Do y'all have any questions on that portion? No questions?
Do you need to put any kind of money, or if you want to open up an account?
It's a good question. So every bank is different. Our bank we require $100 to open the account. It's not a fee. It's your money, and you can spend that money. But that's just kind of the opening balance. So it's a good question. So budgeting, simple. This is my definition of budgeting: is knowing how much you can and should spend each month. One of the biggest issues we see with customers is overdrafting their accounts. And I'm going to get into that pretty deeply with you today. I'm going to kind of explain what overdrafting accounts means. And then we're going to talk about establishing a savings account, which can help with emergency funds. So who can tell me what an overdraft means? Like, what does that mean to be overdrawn in your account? Yes, I have a gift card for you. So I have one more later on. So thank you for answering that. So you're correct. So when you spend more money than you have in your account, is being overdrawn. And banks let you do this when you open an account. You sign up saying, basically, if you go negative in your account, they're going to let you swipe your debit card. They're going to let it go through. but they're going to charge you a fee. So most banks, on average, charge you about $30 per transaction when you go overdrawn in your account. So I'm gonna go through an example here and explain and kind of show you how these fees can really add up. So today's Wednesday. Let's pretend like payday is Friday, okay? And we did a pretty poor job budgeting, and we have $5 in our account, okay? But we're hungry and we want to go to Chick-fil-A, so we're gonna go to Lubbock. So we need gas to get to Lubbock. So we're gonna go to Walmart. We're gonna get gas. We're gonna spend $20. So our account now is negative $15. So we're overdrawn at this point. And the bank's going to say, okay, we're going to let that go through. And then they're going to charge you $30 for that gas purchase. Okay. So now our account is at negative $45. So we made it to Lubbock and with gas. So what should have cost us $20 for gas ended up costing us $50. And then you get to Lubbock. Our account's negative $45, and we go to Chick-fil-A and we get the largest meal they have. I do that. You get the large fries and all that good stuff. And you spend $15 on Chick-fil-A. And again, they're going to charge you a $30 fee. And so now our account is at negative $90. So what should have cost us $15 at Chick-fil-A really cost us $45. And I really like Chick-fil-A, but I don't want to spend $45 for myself at Chick-fil-A. And then if you're like me and my wife, and we leave Lubbock, we like to go get an iced coffee. We do it almost every time. It's a bad habit, but we do it. So we're at negative $90 and we go to Dutch Brothers and we get a coffee. So you get one coffee for $6. And the bank again is going to let you do that for a $30 fee. So now we're at a negative $126 from our Lubbock trip. So our $6 coffee ended up costing us $36. And the difficult part about that is when you get paid on Friday, your paycheck is going to go initially to get your account to zero. So it's a hard hole to dig yourself out of if you get into that bind. So I just encourage you not to do that. So as a recap on the overdraft, had we budgeted and had the money, this is what it would have looked like. We would have spent $20 on gas, $15 on Chick-fil-A, $6 on coffee, which would have been $41 total. But with these bank fees, we spent $50 on gas, $45 on Chick-fil-A, and $36 on coffee, which cost us $131. So we spent $90 more, which went straight to the bank. And with me working for the bank, banks make a lot of money off overdraft fees. So it is an income source for us. But I don't want y'all paying us fees because it's hard. Yes, sir.
How often do people get overdraft?
So you get it when you sign up for your account. So you have
How often do average person get overdraft?
it varies, but this example is very common. People do this a lot. So it's some people never do it. If you budget, honestly, it's pretty easy not to do it. But if you don't, it can happen, and it's hard to get out of it because of the fees. That's a good question. So are there any other questions on the overdraft part before we move on to the next section? Good. Okay. So I made up a sample budget for us. I would be more than happy to send you something like this if you reach out to me after the meeting here. I make something very similar to this. It's just a simple Excel budget, nothing fancy, but it accomplishes the goal. So I want to break all this down. So over here, you'll see there's monthly income, and you'll see at this top section, there's gross pay. So if you've had a job before, you know that your salary that you're given is not really what you take home. It's not, I'm not saying that's fair. That's just how it is. So in this example, we're all going to have different jobs, and we went through that. Y'all all have different degree plans and stuff like that. So for this example, I'm using a $45,000 salary. And if you divide it by 12, you would have a gross pay of $3,750. Okay. But after taxes and all that's taken out, then you really are only bringing home that $2,700 that's at the top there. Okay. So that's how much we make each month, and we're going to kind of go through some different expense situations. So housing expenses kind of encompasses a bunch of different things. And you'll notice that I have a projected expense column and an actual expense column. So a lot of our bills are fixed. So that first item right here, rent, is fixed. You know what your rent's going to be each month. It's usually the same. So those are always going to match. So for this example, let's say that we are out of school and you live by yourself, so you have an apartment. Okay, so your rent's going to be $700, and then down below these next three items, right there, are your utility bills. These to me are the hardest to predict what you're going to spend each month because they vary so often. So electricity bill, gas bill, and water bill, they're always going to be different. And so what you're trying to do is over time get an average of what they're going to be each month, because in the winter my gas bill is real high, electricity bill is low, and it's opposite in the summer. So it's kind of a challenge. It takes you a few months to kind of figure out the best way to average your utility bills out. So utility bills will never be consistent, like we talked about. So you're taking your best guess and adjusting it over time, and it's better to be higher. That way you're not underestimating how much you're going to spend. And then the next section is groceries and restaurants. So you've probably heard before, it's cheaper to eat at home. But if you're like me, I don't like to do that. I like to eat out. Tastes better than my cooking. So food is one of the easiest places to overspend. So just again, you're taking a guess of how much you're going to spend each month on food. But as you know, I mean, getting a soft drink at a restaurant can easily be $3 to $5. So it just adds up really quickly. And then these next items, you may not have these, YouTube TV, Netflix, cell phone, but really what we're trying to accomplish is whatever bill you pay each month, you just want to put it in this budget. And then the next section is vehicle expenses. So if you have a vehicle and you do not owe anything on it, like me, I have a 2014 truck. I would drive your vehicle until the wheels fall off, and then you put new wheels on it and you keep driving it. Because when you have a loan payment, it hurts your cash flow. It's part of life. You're going to have a car payment, but the longer you can put it off, the better. So in this example, let's say our vehicle loan payment is $485, and then we get car insurance, and then fuel. Fuel is another variable expense. You don't always know how much you're going to spend, so you're just trying to get a good average of what you spend each month. And then me and my wife, this section, we do tithe to a church. You don't have to do that, obviously. It can be a charity that you donate to, or just another bill that you have. Just make sure you're accounting for everything that you spend each month. And then this last one is definitely probably the most important on this, is savings. So you're probably thinking, why did he put savings on a budget? Because if you don't account for it and treat it like a bill, it's really easy not to save. So what I recommend is put it in your budget, and when you get paid, immediately transfer it to your savings. That way you're building a safety net. So if you get paid twice a month, what I would recommend is, out of this 100, you put $50 in your account, in your savings, and so forth, to establish a savings. So the budget, to me, in this whole presentation, could be the most confusing. So I want to stop there and see what questions you might have on it, if any. No questions? Okay, we'll move forward. So a little bit more about saving. So if you save $100 each month, that's $1,200 in a year. That helps with unexpected expenses. That sounds like a lot of money, but it goes by really quickly, which I'll explain in a little bit. So emergency expenses, some of us will already know this, but they're not an if situation, but they're a when. You will have an emergency expense that happens in your lifetime, and it typically happens where things happen at one time. So these things don't spread themselves out to make it easy on you. It's just going to hit you. And it happened to me a while back, and I'll explain that too. But some emergency expenses could be a broken arm and insurance doesn't cover you fully. It could be a vehicle that breaks down. Or if you have a house, it could be a hot water heater that goes out. Those are all expensive things that can happen. For me in November, my truck alternator went out, so I had to get that fixed. That was $500. And then last month I had to get new tires, which was $1,300. So you can see if you save $1,200 a year, I would have already blown through that. And the scary part is you have to pay for these, whether it's with cash or with a credit card or a loan. So it's better to save and pay for with it in cash instead of getting in debt and getting in a hole. So according to a CBS News report, 59% of Americans in 2025 could not cover an unexpected $1,000 emergency expense. It's a pretty high number that can't do that, and so they'll resort to credit cards and stuff that's hard to dig themselves out of. And then lastly on this slide, I'm married, and I'm assuming a lot of y'all will be married at some point in your lives. And 1 in 4 divorces are due to financial issues. So really not budgeting and taking care of your stuff can cause a strain on your marriages. So that's the second out of the 3 sections. We have one more left. So any questions on the saving aspect of that?
Would you say that the savings depend on how much you're bringing in? Like your salary?
It does, but that's a good question. So what I would say is you'd be surprised. Someone that makes $1 million can have $0 in their account, just like someone that makes $20,000 has 0 in their account, because human nature is to spend what we make. The more you make, the more you spend. And it's just, it's a trend that happens to all of us. Really what I would say is you really have to fit your budget. Every budget's different. And so I think everyone in here could start with this $100 easily. And if you can do more, I would definitely do that. And as you get raises throughout your career, I would increase that savings amount and just keep it going, because it's really helpful to have a savings, and you just feel some financial freedom in doing it. So appreciate the question. Any other questions? No? Okay. So this section, if I can get it to go forward, there we go, will be how to qualify for a loan. So before we get into it, I want to explain that there's places in Loveland, there's places in Lubbock that aren't banks or credit unions that offer loans. And I would highly recommend you not get a loan there because they do not have your best interest in mind. They're going to charge you a very high interest rate, oftentimes over 50% over the life of the loan, which is crazy. So if you get a loan, and we're all going to need one for a house, car, etc., I would recommend getting one from a bank or a credit union where they're not trying to kind of take advantage of you. Is what I would recommend. So how to qualify for a loan. First, if you follow the budget steps, you'll have money for a down payment and stuff like that will help you qualify for a loan. But the most important thing is your credit score and your credit history. So a simplistic definition that I have for a credit report is a report that banks pull that shows if you have any credit cards or loans that you're actively paying. And so this report, it really tells the truth to us with customers, so we can see if you paid your loan on time, if you were 30 days past due. We can see cell phone bills that are past due, Verizon. Those aren't loans, but they show up on credit reports along with medical bills. We can see if those are past due. So again, on credit, who looks at your credit score? We've already talked about these a little bit: banks, car dealerships, and mortgage companies. And on a credit score, the range can really go from like 300 to 850 is it's a pretty wide range. So who can tell me what the bottom tier of like a good credit score would be?
500.
It's higher.
600.
A little higher.
750.
You said it, but I can't have you answer that. Someone else has to answer that. So keep guessing.
Nobody answers.
She said the answer, but
What did you say?
I can't tell you.
750.
No, you're too high. Yep, 650. So I'll give you my last gift card. So you have all the answers too. So a fair score, at least for us, is a 650. A 650 really shows that you're you may have had a few hiccups, but you're paying most everything on time. So if you look at this chart, 300 to 560 is pretty bad credit. You're not going to get a loan with that score. 560 to 650, it says bad. If you're at 650, you're fair. But anything below that could be considered as if you have kind of missed some payments and made some mistakes. And then 650 to 700 is fair. 700 to 750 is good, and then excellent. The good thing that I think about a credit report is you can't get a bad score by taking care of your business. If you pay your bills on time, you're going to have a good score. It just goes with it. So I recommend putting your bills on automatic payment. Not everybody does that. I recommend that because you don't really have to think, did I pay my water bill? Did I pay whatever it may be? That's what I would recommend. And then how do you establish credit? Because you can't get a credit score if you don't have any debt, if you've never taken out a loan. So the cheapest way, if you do it correctly, is to get a credit card. Now, this could be dangerous because, again, credit card companies, they don't really care, so to speak, if you pay that off each month. They don't care. They want you to rack up some debt. So what I recommend doing starting off is getting a credit card and only using it for gas purchases. Because, again, you're just trying to establish credit. You're not trying to get a big bill. So what I recommend is getting gas with this card only and paying it off each month. If you pay it off each month, there's no interest that they're charging you. You're not paying anything extra than if you were to swipe your debit card. So if you do this, when you decide to get a house or a car, you're paying your bills, you're going to have that credit score that's 650 or higher, and you're going to be in good shape. So I'm going to stop there, and that's kind of the end of the presentation, but I want to see what questions you have on all this.
What are some, if a student wants to get a credit card, like what do their company need?
So you need to have an income. So you have to have a job. And from my experience, it's a lot easier to get a larger company to give you a credit card, like Discover. Discover is real good to work with you. I tried that. I've not tried any others, but like American Express, those big companies, they'll give you a credit card because they can take on more risk. If you try a local place for a credit card, they may kick it back. But as long as you have an income, you should be able to qualify for a credit card. Good question. Any other questions?
So if you don't like have a car and like you want a credit like score like to build up, what are like some other ways like you use to use it?
Outside of a credit card?
Oh no, like your credit card, but like you don't have for gas purchases to build up your credit score.
So if you don't have a credit card is what you're saying.
Like for
Oh, a car. Okay. Yeah,
Yes.
good question. I'm sorry. So you can use it for groceries. You can use it when you eat out. The main point of the gas thing is not to put up a big bill on there and to pay it off each month. So we pay ours off each month. That way the credit card company is not getting any interest at all. It's just as simple as if you were to swipe your debit card. So if you don't have a car, use restaurants, food, some of those smaller items that you use.
Subscription.
Yeah. So you could definitely do that. So that's a good question. So they are typically 20% or higher. And what frustrates me with credit cards is like the one I have, my minimum bill each month is $35. So if I pay $35 each month, I would never pay that off. And that's kind of their point. They want you to have interest that you're paying them. So that's why I say just pay it off each month. But their interest rates are high, 20% or more is standard. So yes, like I have a Southwest credit card, so you can get airline points. And some people are mad at them because they just got rid of their free bags. But I still like Southwest. But you do get points. Discover does cash back, so they give you like 5% on certain purchases and 1% on others purchases. So there is some incentive to using one. It's just it's easy to get in a bind with it if you don't pay it off.
like how do you choose one to like start off with?
So honestly, I just picked one. I just picked Discover. It was a really good one for me because I could get gift cards to like Texas Roadhouse, which is where I like to eat. So it doesn't necessarily matter. Just make sure you're using a reputable company like Discover, American Express, something you've heard of. And you can look at their perks, what are they giving you back for it? So it's not a big deal which one you use as long as it's a company It's a good question. Banks do have credit cards. If it's your first credit card, it's your first anything to owe on. It's sometimes harder to qualify at the smaller local level. This Discover card, they're huge, and so they don't go through all the hoops that some of these smaller banks would go through. But you can qualify, apply.
Would you recommend it?
I would not. I would recommend getting one through a big company, honestly. So they're gonna have more perks, and it's easier. So I really would recommend that.
What about credit unions? Do they also have credit cards?
I honestly don't know if credit unions offer credit cards. I know they have loans and all those things, but I don't know. I'm assuming they do, but I don't know 100% sure on that. But you could definitely check with them. Any other questions? This table is like active, like questions galore. Do y'all have any questions?
Calling your ass.
Yeah, I don't have to ask anything. So, but if y'all don't have any more questions, I appreciate your time. And I'm going to leave some business cards and some free pins up here. We don't charge for advice. So if you have a question, I don't mind answering any of these things. So it's not a sales pitch. I'm not making anything off of this. So I just want to help y'all's future. So
Or even financial advice is free.
with me,
Okay.
I can give you tips. So
Okay, that will give you a business card.
yeah, so I'll lay that out and lay some pins out. But I appreciate y'all's time and hope y'all have a good spring break and into the semester. So, all right, thank you.
Yeah, everybody put their names in it.
Oh, no, I don't.